Hello traders and welcome to another video review. Today is Thursday, July 12th, 2023. Let's find out what's going on the Forex economic calendar today. Some data had been published overnight, and those data are from Japan in form of the adjusted trade balance, export and the trade balance. As you can see, the results of the actual reading are here. Not too many surprises overall in the Japanese data. Some data were published from the Australian markets as well. Employment change, full employment change, quarterly business confidence, and the unemployment rate. The unemployment rate is in line with the previous reading, 3.5%. There is no jump to 3.6% as expected. During the London session, we got the German PPI data released. The PPI is minus 0.3%, which is better than minus 0.4% expected, and minus 1.4 expected. Previous reading, of course. So definitely some good trigger for the euro to strengthen across the board. During the New York session, we got the initial jobless claims scheduled for release at 2:30, together with the Philadelphia Fed manufacturing index and Philly Fed employment data. Those data are the most important for today. And 1 hour and 30 minutes later, we got another very important data release: existing home sales. So as you can see, the most important data releases are scheduled during the New York session, and the last is, of course, Fed's balance sheet, scheduled for release 30 minutes past 10 p.m. So looks like a pretty busy day, with the major economic releases moved to the New York session today. Let's find out what can we say about the Japanese yen and Australian dollar next. The US dollar to the Japanese yen 4-hour chart looks like it has bottomed at the level of 137.26, and since then the market is in the corrective move to the upside. It looks like the level of the 140 will now act as the temporary technical resistance for this market. It's a nice round level, with the low still seen at 137.26. So that's the technical support. We got the short-term trend line visible on the 4-hour chart as well. So we are trending here just above this trend line, so that's not that bad at all for the bulls, of course, from the bullish point of view. If we copy this line, I guess that we might have some kind of a parallel channel here, so kind of a channelish maybe correction to the upside. And let's just find out how much did we actually retrace from the last high. So let's just set this level as the swing high, just over the 145, and of course this level as the swing low. So we retraced almost 38% of the last move to the downside. So you can see that the 38% is located at the level of 140.26. Okay, so we're just trading just below, we are trading just below this level. 50% of the retracement is located at 141.14, and 61% of the retracement is located at 142.09. There is not that much of the technical resistance here. As we remember, the Japanese yen market has been moving up very strongly, so they didn't create too much of the resistance. However, I would like to point out this area here between 140 and 26, 38% of the Fibonacci retracement, and the 100 periods moving average, which is right now at 140.64. This zone here might provide some sort of the resistance for the bulls, if they ever get there, because so far the high is 140. So please keep in mind this kind of resistance might be increased bearish activity when the price hits this zone, and the momentum remains positive. 56 points is not like a big number for the RSI, but there is still some sort of the room to the upside, and there is still some sort of the room to the upside on the chart as well. So maybe these markets might be right now in line and ready for another jump to the upside. On the RSI, there is at least 10 points or even more before the market become extremely overbought, and there is at least, let's say, or maybe roughly about 100 pips for the on the chart of the US dollar to Japanese yen before this market will hit some sort of the important zone in form of the, of course, 58% Fibonacci retracement and eventually the 100% moving average. So that's the situation on the US dollar to Japanese yen. Let's switch to the Australian dollar to see how it reacted after the data was published. So what do we have here? We still can clearly see the potential double top on this market. If you don't see it, let me just show it to you. There you go. This is the potential double top. So far it's working nice. The market been rejected from this level of let's say 6,902 pips. Okay, but if we take a look a little bit closer, we can clearly see that just recently we broke just above the short-term trend line. So if we just place our trend line here, we got this nice breakout to the upside. So right now the local technical support 6,753 pips is of course the most important one intraday wise and for in the short term. And now we are approaching the next important levels, the level of 6,840. It was tested already, but there is no 4-hour candle close above this level. So we should just wait for another movement to the upside. The momentum jumps back towards the level of 60, so it's kind of a strong but positive momentum. So if this level 6,840 is clearly broken, it's clearly violated, then of course we can go way higher. We can go towards the swing high located around 6,897 pips. Of course, please take a notice that this decline here is in 3 waves, so it's clearly corrective. It's clearly some sort of the correction, 3-wave correction to the downside. So maybe this correction has not been completed yet. That's the alternative plan. However, it doesn't actually looks like the bulls are done, because we hit the level of 40, and then of course we got this nice pin bearish candle at the end of this movement, ABC to the downside, and then very nice breakout higher. So that's the Australian dollar. US dollar to Japanese yen was done already. Now we should take a look at some other market, because we got the data from the US dollar to the USA. So let's take a look at another US dollar market related pair, US dollar to the Swiss franc. So here, if we switch to the daily, we can clearly see that on the daily time frame chart the downtrend is still the dominant one, and just recently we've made another swing low at 8,556 into the extremely oversold market conditions. So let me just place this kind of a level on the chart. So right now we know that this is it looks like the yearly low. There you go. This is the yearly low. What are the chances for a bounce? So market is trying to bounce, but we are still in the negative territory, and as you can see, this bounce was very limited. especially of course to the upside. So if we zoom in, we can clearly see that this market is under the bearish pressure, despite the fact that on a daily is still under extremely oversold conditions. The level of 8,630 is the intraday technical resistance, and the market is actually moving sideways, up and down in order to consolidate the recent losses. I mean, from the bearish point of view, just around the 50 periods moving average and around the level of, let's say, 40 on the RSI. So there is no sign of any kind of a termination of the downtrend, except the extremely oversold market conditions. And in order to continue some sort of the bounce from this oversold levels and in yearly lows, we at least need to break above 8,630 and then follow higher towards the 8,762, where is the 100 periods moving average on the 4-hour time frame chart. So that's the outlook for the US dollar versus the Swiss franc. It's still bearish, it's still under the bearish pressure, and it doesn't look like anything could change in the coming hours. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.